In this video, we are going to be analysing Carvana, ticker CVNA. Now, why is this stock up so much, not only today, but recently, just in the past? Now, the main reason this stock has been moving so much is down to two key reasons. Firstly, the beginning of the May, they did have some really strong and better than expected earnings. So $30 and $28, we have now broken over these yesterday, and again, these are our second deviation, so these are already high probability short locations, but we have gone through these with relative ease, and
it's so quick it can destroy your entire face.
And again, that was probably because we tested the level basically twice and sold off both times, and now we're retesting it. And again, when you keep retesting a level, you are likely to break. So that's basically what we got now. But what we are now testing are our final deviations, our third deviations. So at $34.80, which we've hit today, this is our third deviation on the 6 month, a high probability short. Now, this stock has been moving a lot, so these levels do can change quite quickly. These three levels were actually hit before when we were getting these original moves. But this third deviation from the 1 year has never been hit yet, even adjusting the price for its recent movement. So what this really tells us is once we come into this level, if we can continue this strong momentum, more than likely we're going to pull back for two reasons. Firstly, you don't tend to see stocks trade above their third deviations, and even if they do, it tends to be short-lived. So usually that's where I look to play for reversals. But not only that, we have not even hit this level, so it will be the first time hitting this level, so a probability or a reversal is just really high in general. So this is really the main focus for me. I'm not trading Carvana at any of these levels. I'm only paying attention to 42.10. If we come into this, I'm trading this short buy, so I'll put that out there now so you know how I'm looking to trade it. Again, it is now hard to borrow stock, so we'll be looking through options as a way to trade it. I'll be looking at either vertical spreads or outright puts, and the reason for that is, again, that we have defined risk. Because a stock like this, it has been moving strong, and if for any reason there is some sort of a squeeze, we don't want to be on the backside of that. So if we have defined risk, if it goes completely against us, that's fine. We know how much we're going to lose, but if, and the probability suggests it's going to pull back, then again, obviously we want to be making money on that move. So that's how I'll be looking at it. Defined risk strategies, but looking to be short at 42.10 with our first target around $35. So we'll be using that as a target. If we break that, $30 and $28 as supports on the way down. And the way I would be completely out of this stock is at $16.80, because that is our statistical mean. This is our fair value. But if their earnings do come out quite in line, we will probably not see our stock reverse to this level anytime soon, because what will probably happen is price will stay elevated, and then you'll see in time this level slowly adjust up, and then when it comes up to a more reasonable level and the move is being more priced in, then you'll start to see a pullback to its fair value. But as of right now, I don't think this level is all that likely unless we wait for its earnings seasons. However, if we get to the 42.10 before earnings, again, I'll still be looking to play that, looking to play a key target of 34.80. And again, it's all going to be how long to earnings. If this move is happening before earnings, I want to be out before the release of earnings. So I'll be trading that, I'll be playing it down to then, and then if earnings drops while we're here, I'll be out completely. So that's how I'll be looking at this stock. Short bias overall, but really trying to be more patient, waiting for that 42.10. And again, it's not a time to be stupid. A stock like this can definitely squeeze. There is definitely risk, and if you're a long bias trader, again, there is definitely that opportunity for the upside. But for me as a reversal trader, from how I trade, I wouldn't take a stock like this long. So instead, as I'm looking at it from a reversal standpoint, but it is a stock that can squeeze, you want to be trading it smart. And so that means having defined risk, because we don't want to be really getting damaged if it does squeeze for any reason. If we're playing the reversal and it goes against us and we're playing defined risk, that's fine. It's just a normal losing trade. But if you had undefined risk and you try to play the short side, again, there's a limited risk on a short that could definitely squeeze. So you need to be properly defined and hedged in a trade like this, and so that's why I'll be looking at it from a defined risk standpoint. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.